Hello to you, Mark Hall here with your weekly fine wine investment market update. Today the 1st of March 2013. Now this is the first video from our new offices. Only 150 metres away from our previous office, but the continued expansion of the company just meant we ran out of space. So what's been happening in the market this week? Well, let's look at the auction front, where Ackers, Merrill and Condit held a major sale last Saturday in New York. This realized $3.1 million US, which was notable because instead of the money coming exclusively from Bordeaux and Burgundy, diversity was the watchword. John Capon, the president of the firm, called a collection of Italian wines that went under the hammer the most spectacular he had ever seen. So while the top lot in the sale was indeed from Burgundy, this is a small indication of what we have believed for some time, and that is that the wine investment market is becoming ever more diverse. Basically these days, if you want to make money in the market, you really should be looking beyond the first growths of Bordeaux. Now, on this subject, it's worth looking at how the first growths are currently performing in relation to the other wines in the market. Now, while it's true to say that the Live X50 index, which is made up of first growths only, is up 8.5% since the 1st of November last year, that does only equate though to 2% growth per month. It is also true that in the last 2 years, many of the first growths have lost an enormous amount of their previous value. Now, as a company, we believe that the first growths are currently rising because the market correction was actually an overcorrection, and these wines are simply now finding their realistic levels. Now, we also feel that it could be a mistake to believe that these 5 wines will reach anywhere near the peaks of a few years ago, as the overinflated prices were driven almost exclusively by one particular market, and that was China. Now, when China lost interest in the first growths, the value of these wines plummeted, and I would say it's extremely unlikely that China, or any other market for that matter, would be prepared to pay what these wines were previously selling for. Now, on the flip side, there are wines in the marketplace which we have been buying for our clients that make the 8.5% rise on the first growth seem, well, fairly small change. With our unique trading platform, we can offer what the other wine brokers simply can't, which is the ability to buy into wines when these are hot and then sell them out the minute they start to wane. In other words, we can enable you to invest in the market in any way you wish, be that short-term, medium-term, or even long-term. And just to give you an example of some of the short-term gains we are making for our clients, we bought into the Pavilion Rouge a little over a week ago, and that has risen in value by 9.4%. Another wine we bought into was the Cheval Blanc 1998 actually, and that was in December of last year, and that is now 11.8% up. On the 8th of January, we bought into the Orzon 2006, and in a little over a month, that has risen by 20%. The Angelus 2005, bought in the same week, has seen a gain of 17.04%, and Parve 2009 has gained 9.09% in the same time frame. Now, there are many other examples, but our general advice to you would be that there are extremely good gains to be made if you look beyond the first growths. So, if you'd like to open a trading account with us, simply visit astonlovell.com or just call us on 0208 858 9990 and we will be all too happy to help you. Now, that's it for this week, so we will see you next Friday.